Hey, you guys. Miss Allie is back, and today we're in Accounting 2, and we're going to be making this departmental margin statement. This is a section in your book in Chapter 4 where they want you to learn how to make these for different departments in the stores because that's the way real life is. So this one is just for the kitchen. This is 4-2. You can see that up in my title up here, and it is work together. We're doing work together. And so just want to let you know where we are on that. Okay, so I set the document up like what you would see on page 109 of your textbook. 109 of your textbook. I sent you a document that was the adjusted trial balance for this project, for this problem. And it has a lot of the numbers that you're going to need. I emailed you the January 1st merchandise inventory dollar amount. So as we go through this, I'm going to try to show you or explain to you on the trial balance where you're finding these numbers and follow along in the book. It also shows you there how to do this. One of the things that we have to do with this is we have to figure out the percentage of net sales for the different dollar amounts that we come up with. And we're going to follow straight by the book. Straight by the book. All right, so again, this is kitchen up here at the top. It's kitchen. We are in 4-2, work together. My tabs down at the bottom show you the bathroom, the kitchen, and on your own so that you can do that. You can keep on working on it if you want to. All right, so we're going to start with sales here. Another word for sales would be revenue. Okay, so we have to come over to, how far do we go? 1, 2, 3, 3 columns. All right, so we are here, and we have to put in our sales for our kitchen. So you're going to find that on your trial balance, your adjusted trial balance, and it's on the back side. It's on the second side. And the dollar amount that they're giving us is $417,953.07. Okay, so then that's sales, and we have to figure out some of the discounts because we can't count those. So sales discounts and returns and allowances, we cannot count those. We have to subtract those out of this grand total. So this is just sales. This is gross sales. This is not net sales. So the next number that I need to write here is sales discount, and I have that on the very next line on the trial balance, $6,655.27. And then right below it is also sales returns and allowances. So that is $7,634.77. All right, so both of these, sales discount and sales returns and allowances, we have to subtract these off of what we had for sales. So in this box, in this cell, E8, we're going to put a little formula here where we have to add these two together. We have to add the sales discount and the sales return and allowances together. So I'm going to put equals, and then I'm going to put the cell addresses in there and add them together. D7 plus D8. Okay, so now we have this grand total of these discounts and sales and returns and allowances, and added them together again, and we've got $14,290.04. All right, so to get net sales, we have to subtract these off. We have to subtract this off. So in this box, in this cell of E9, I'm going to put the equation. I have to put an equal sign in front of it. And this is going to be E6 minus E8. Okay, hit enter. So now this gives us our net sales. It tells us, and actually I put it in the wrong column, didn't I? This I'm going to cut and paste. Cut, paste. Okay, so it should be in this column, the far column. And really, to make it like the book, well, this would be over here, and um, this column. Let's see, drop this a little bit here. Now we pull this over and tell this to wrap around. Okay, well, it's all right because I don't know how to do that in Google Sheets, but in Excel, you would tell it to wrap around. All right, so put that back up here. And this, if you'll notice, is net sales. Net sales. That's that dollar amount. And this column says percentage of net sales. So the percentage of net sales, net sales, net sales, it is 100% of itself. 100% of itself. So I got to put 100 in there. It is 100% of itself. The rest of these, we're going to find out what percentage of these sales make up the profit, um, the direct expenses, cost of goods sold, that kind of thing. So now this next section is cost of merchandise sold. And we have to start off here with the merchandise inventory from January 1st. This was one that I had to email to you. I had to email you this dollar amount, $140,890. Okay, so that's how much they had on January 1st to start selling to their customers on this year, on the year of 2020. All right, that's what they started the year out with. Now we have to look at purchases. And purchases, this dollar amount is still on your adjusted trial balance, and you have to look for it. And it says kitchen, or we're doing kitchen, Beth. Kitchen, yep. So kitchen dollar amount of purchases is $204,164.91. Now, when you have purchases, sometimes you have discounts and sometimes you have returns because the product, maybe it's damaged in shipping or something like that, and you have to send it back. You do not want to count this as part of your purchases. So we've got to take these out. We got to take them out. All right. So over here, we've got purchase discount, and that's on the next line in your trial balance, and it's $2,505.71. And then your returns and allowances should be the next line, and that total is $4,925.52. Okay, so if we have to subtract both of these off our purchases, then let's add them together. And that's what we do here. We're going to add them together. Equals C13 plus C14. So this gives us our grand total of adding the discounts and the purchase returns. That's what that is. Now we take our purchases minus all of this stuff. So this cell will be our net purchases. We have to subtract it to find out what this dollar amount is. So I'm going to let the computer work for me. I'm going to put an equal sign D12 minus D14. Okay, so the 204 164 minus the 7431 gives us $196,733.68. That is our net purchases. That is our net purchases. So in this calendar year, we started out with $140,890 worth of merchandise. We added $196,733. So we have to add those together for this cell that says total cost of merchandise available for sale. That's all the merchandise that we had available for sale in this calendar year. So that is E11 plus E15. So for the whole calendar year, we had $337,623.68 worth of merchandise to sell to our customers. That's what that means. That's the total that we had to sell. Now, here we have to plug in what we haven't sold yet as of the end of the year. This is our ending inventory for the year. So we got to put that in here, and you're going to find that on the front of your trial balance. You're going to find that dollar amount on the front of your trial balance, and that dollar amount is $147,080.62. Okay, so that's what we haven't sold for this year. Have to cut it off at some point, so December 31st is when you cut it off, and then that'll be the amount for the next year. For starting, that'll be the beginning inventory for the very next year. Okay, for the next day. So the next line we have to find is cost of merchandise sold. How much did we sell? How much did it cost us to put it into the store? That's what we have to find out. So it's going to go in this cell, but we got to figure out how to do this. So let's think about it. Total merchandise available for sale was 337,000. That's the total available for sale for the whole year. But we had left over 147. So to find out how much we sold, we have to subtract these. We have to subtract them. So I'm going to put E16 minus E17. And this gives me $190,539.06 that we actually sold. Okay. Now, cost of merchandise. And right here, I put a little equation here. Let me fix it a little bit for you. Sales equals cost plus profit. Okay, and sales could be called, revenue, whatever you want to call it. Cost is cost of goods sold. Profit, sometimes they call it margin, sometimes they call it markup. It doesn't matter, it's the same thing. But your cost, what you paid for it, plus whatever your markup is how much you sell it for to your customer. So what we just found out is right this one, the 190. We just found out how much it cost what we sold. So that's that part right here, cost. This up here, sales, net sales, we'd already figured that out. That's right there. So going down this document, we're going to find out what the profit is. Okay, so with this, we have to find out what percentage of sales it is. And if y'all remember in math, you have a numerator and a denominator. Whenever you're figuring out percentages, it's always a division. Okay, so in this case, the large number is going to go on the bottom. Think of it that way. The small number goes as the numerator. All right, so my numerator is going to be F18, and I put the slash, and then, or I call it a slash, and then my denominator is my net sales. All right, so that's F9. Hit enter. So this is telling me that 47.2% of sales is going to the vendors I bought it from. That's what that means. Okay. So here, the next line is gross profit. So this is the profit before we've taken any expenses out, gross profit. So to figure that out, we have sales and we have the cost of goods sales. So we're wanting to know what's left over. So we have to subtract these. So it's F9 minus F18. I'm making sure I get my lines and columns right. All right. So going back to my formula here, cost plus profit equals sales. Here's your cost. Here's your profit. You add them together, you get your sales. Likewise, you know that if it's 100% here, these two, we got to find this percentage, but these two percentages added together better be 100%. So again, my numerator is the smaller number. Equals F19 divided by F9. Okay, so these two percentages, 47% of my sales, I have to pay back to the vendors. 52% of my sales stays in store so I can pay for stuff to keep the business going. Again, 47% goes back to the vendors. That's the cost to buy the stuff. 52%, 52.8% is staying in the store to help pay expenses for the store and to keep the business running. Okay, so next we have direct expenses. And the direct expenses just to take care of just the kitchen department. That's all this is talking about. First of all, we have advertising expenses. And this is in that trial balance. This is in the trial balance. $11,900. Payroll taxes expense. This is only for the people who work in this department, no other department. This is not for general management or anybody like that. It's only people who work in the kitchen department. And then salary expense, $59,121.95. That's salaries for just the people who work in this department, in the kitchen department. So these are the direct expenses. Yeah, there's other expenses, but those are all considered indirect because the whole store has to pay for rent. The whole store has to pay for electricity or water or internet or anything like that. So these are the only direct ones. Now, we're going to have to subtract them from our profit. This is gross profit. We don't show a real profit until after we have taken our expenses out. So here, I need to add these three because it does say total, and total means add. So I need to add these three together. So I'm going to equal, and I'm going to type in sum, and I'm going to click and drag. Oh, it didn't work for me. All right, so this, and it's E21, and put a colon there, and E23. So our total expenses. Now with this, let me tell you, this formula, I did it sum parentheses, and this told it a block from E21 to E23. I could have done E21 plus E22 plus E23 to do the same thing. I could have just added these up on the calculator and plugged it in. It would have done the same thing. All right. So these is the direct expenses just for the kitchen department, and we have to find out what this percentage is. So again, numerator is the smaller number. So in this case, it's F24 divided by, what was that before? F9. Enter. So it's telling me that for this department, out of my sales, 18.8%, 19%, so to speak, 19% of it goes to direct expenses for just the kitchen department. Now they want to know how much you're going to give the rest of the store. How much did the kitchen department work, and how much of dollar value are they giving back to the rest of the store to help pay for everybody's contribute, that is, to everybody's electricity and phone and water and all of those, insurance and all that kind of stuff. So we got to find out what the margin is. Margin right here, department margin, means profit. So we're going to subtract this because here's our gross profit. Now we have to take away our expenses. So here I'm putting in equals, what is that? F19 minus F24. So for just the kitchen department, they are contributing to the overall profit and to everybody's expenses for the whole store, $136,908.77. Now we have to figure out what the percentage is of their sales that they're giving back to the rest of the store. All right, so equals, and that is F25 divided by F9. So 33.9. So 34% of the sales here are actually going back to the big pot of profit for the whole store. And that's going to pay for everybody's, the general management, and that's going to pay for the electricity and the rent and everything that goes into having a business. All right. So that's where we are, and that's done. So I hope this makes sense. Please let me know what you think of it. If I go too fast, if I go too slow, you can go back and watch the video. So I'm enjoying this. I hope this helps you guys out, and we'll see you later. Bye.